Hey there! Welcome back to our channel, where we explore fascinating events throughout history. Today, we'll dive deep into the world of finance and investigate the causes behind three significant banking crises: 1933, 2008, and the most recent one in 2023. So, grab a snack, sit back, and let's get started. Let's rewind to 1933, a time marked by economic turmoil, known as the Great Depression. The banking crisis during this era was a crucial turning point for the American economy. So, what caused it? The banking crisis of 1933. In the early 1930s, the stock market crash of 1929 had a severe impact on the economy. Many Americans lost their jobs, and businesses struggled to stay afloat. But what caused the banking crisis? One major factor was the unchecked speculation in the stock market. Banks were heavily involved in risky investments, hoping for quick profits. When the market crashed, these investments turned into massive losses, leaving the banks in a precarious position. Additionally, the practices of the time, such as banks operating with inadequate reserves and engaging in unsound lending practices, contributed to the crisis. People began to panic and rush to withdraw their money from banks, causing widespread bank runs. To address the crisis, the U.S. government enacted the Emergency Banking Act in 1933, which aimed to restore confidence in the banking system. This act allowed the federal government to examine and reopen banks that were deemed stable, while those in dire condition were closed or reorganized. The banking crisis of 2008. Fast forward to 2008. And we witnessed another major banking crisis that shook the global economy. This crisis, known as the Great Recession, had far-reaching effects. What triggered it? One key factor was the bursting of the housing bubble. In the early 2000s, the housing market experienced an unsustainable boom, fueled by loose lending practices and a surge in subprime mortgages. As the bubble burst, housing prices plummeted, leading to widespread foreclosures and significant losses for financial institutions. The crisis was further compounded by the complex financial instruments known as mortgage-backed securities and collateralized debt obligations. These instruments, which were bundled and sold to investors, had a significant exposure to risky mortgages. When defaults increased, it triggered a domino effect, causing massive losses throughout the financial system. Additionally, inadequate regulation and oversight, as well as the excessive risk-taking by financial institutions, played a substantial role in the crisis. The aftermath required government intervention and bailouts to stabilize the financial system and prevent a total collapse. The banking crisis of 2023. Now, let's shift our focus to the most recent banking crisis, which occurred in 2023. This crisis is a testament to the fact that economic turbulence is not a thing of the past. So, what brought us to this point? One of the primary drivers of the 2023 banking crisis was the rapid rise of decentralized finance, DeFi, and cryptocurrencies. While DeFi provided exciting possibilities for financial innovation, it also introduced new risks and vulnerabilities. Smart contract vulnerabilities and regulatory uncertainties surrounding cryptocurrencies led to several high-profile hacks and scams, resulting in significant financial losses. Additionally, the emergence of non-bank financial institutions, such as fintech companies and digital asset exchanges, disrupted traditional banking systems. The rapid growth of these entities, combined with less stringent regulations, created potential systemic risks. Furthermore, global economic imbalances and geopolitical tensions added fuel to the fire. Trade conflicts, political instability, and economic disparities among countries created an uncertain and volatile environment, impacting the stability of the financial system. The 2023 banking crisis was also influenced by the increasing interconnectedness of the global financial markets. The speed and magnitude of information flow, combined with complex financial products and trading algorithms, created a potential for rapid contagion and market disruptions. To mitigate the crisis, governments and regulatory bodies had to step in, implementing measures to stabilize the financial system and restore investor confidence. These actions included increased regulation and oversight of the cryptocurrency market, enhancing cybersecurity measures, and promoting transparency and accountability in the financial industry. It's important to note that the 2023 banking crisis is a recent event, and its full consequences and long-term impacts are still unfolding. It serves as a reminder that the world of finance is ever-evolving, and constant vigilance and adaptability are crucial to ensure the stability of the global economy. And there you have it. We've explored the causes behind three significant banking crises: 1933, 2008, and the most recent one in 2023. Each crisis had its unique set of circumstances and contributing factors, but all had far-reaching consequences for the economy and people's lives. By understanding the causes of these crises, we can learn from the past, identify potential risks, and work towards building a more resilient and sustainable financial system for the future. Thank you for joining us on this historical journey. If you enjoyed this video, don't forget to like, share, and subscribe for more fascinating content.